Are we back? Are we back? I think we're back. Says we're back. If we're not back, then we're not back. Then I don't know what else to tell you guys. Actually, I do know to tell you guys. Welcome back. Welcome back. How about that? Welcome back, everybody. It's Ted here again, Bodies and Wicks. If you don't know what a body and a wick is, probably shouldn't be trading. I'm just kidding. No, but you really shouldn't be trading if you don't know how to body and a wick. Anyway, so taking a look at Bitcoin here. Again, 2 o'clock, as you can see. Well, actually, that was just probably more like noon. Let me get off the. And this was actually leading up to it, so it probably started, yeah, just around noon, 1, and then 2. 2 is when it actually blasted off, okay? And as you can see, look, I mean, you can just tell right around here, equal highs. Equal highs. Anytime that you have something like this, close to equal highs, that's just a dead giveaway. It's a dead giveaway that you're going to eventually break that, right? It's not. This does not mean resistance. This does not mean there is so much resistance that you're never going to get past it. This means that the resistance is. It really means nothing. It just means that, hey, watch for this. There's a lot of liquidity right here. This is basically engineered liquidity. Engineered liquidity was liquidity created by the large institutions, things like that. And if you don't think large institutions are in Bitcoin, then you're sadly mistaken. I mean, crypto can be manipulated just as easy as, you know, any kind of other currency. I mean, maybe not to the full effect to where they can just, you know, flip a switch on and off, but there are, you know, mining pools out there that can, you know, just drop, you know, as much as, you know, as much money as they want, you know, as their reward for mining, and trying to keep the price low, and then, you know, trying to buy it back at a low price and things like that. But they engineer this liquidity right here on purpose to try to get people to think once it gets to this price, it's going to sell. It's going to sell. And at 2 o'clock, whenever this thing started pumping up really hard, people were probably going sell right here. And guess what? Guess what the smart people were doing? They were just holding. They were just buying. They knew it was just going to keep on going through, right? So a lot of people that were doing, you know, leverage trading, trying to short the market right here, got absolutely killed. And I mean, I don't feel bad for them, because these people need to pay attention to what's going on in the market, and really need to learn how to read some things. That being said, what we haven't seen though is that ever since then, I mean, and this is just the 1 hour, this isn't anything else, is that now again, those gaps I was talking about last time, we have created a couple, and we're gonna have to wait to see what's gonna happen whenever it falls back to these gaps. So from candle to candle, right? Sorry, I'm anal about all these things being straight. What is probably going to happen is so I just drew a Fibonacci from those two lines, right? And I draw a halfway point Right, so about a halfway point from here. I'm just gonna draw all the way across, and I don't know what that is. 4, 5, 6, 5, 2, 9, 6, 7, 5, 2, 9, almost 6, 7. Right, that is the exact middle text. Is we're just gonna dash it instead. Boom. Now it doesn't have to do this. It doesn't have to do this, but if it does, expect explosiveness out of this. I mean, I'm definitely, you know, I'm gonna expect a retracement out of this no matter what. You know, this thing isn't gonna go forever. I'm looking to the left. I don't see anything that is going to try to stop this, or I mean, you know, or at least continue to try to make it reach and reach and reach and reach. I don't see anything like that. You know, we're going to have a pullback. There's just no doubt about it. So, where am I looking? I'm looking in this huge space right here, anywhere in between, you know, 55.6 and 57.3. But if it gets to 56.5, pull the trigger and pull the trigger hard, because that's, oh, and also boom, 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 here we go. What we have here is a breaker. All right, right through there. So it could even pull a little bit further. Pulls a little bit further, hits the breaker. I wouldn't be surprised if we do see it come down into this area somewhere around 56. 56.3, 55.9, somewhere around there. Somewhere around here is what I'm going to guess. I'm going to guess we're probably going to see Bitcoin fall prior to or right around here. And then I'm also going to guess this is probably going to also be somewhere around the 70.5% level as well whenever we do a Fibonacci trace. So the last down move, here we go to the highest up move, 70.5. Look at this. It just can't get any better than this. The confluences of all of this is just mind-blowing. This is what I love about smart money. This is what I absolutely love about smart money. Because once you just keep hacking at it, you keep going at it, and you keep going at it, and you keep going at it, you find out that all of it just falls together. All of it falls together. So, not only do we have a breaker, low, high, low, all right? So your highest candle from that hourly breaker stretched all the way across. You do Fibonacci, right? Your levels that you want your Fibonacci or that people buy in the Fibonacci are going to be anywhere between 62% and 80%. Primarily the 70.5. Your consequent encroachment or your median threshold of the gap that we just had. So there's a huge gap right here, right? So what I'm saying is that there's a huge gap right through here. We don't know how much price has been missed as this price took off. So it's going to come back and try to fill in these gaps, right? And once it comes back and tries to fill in these gaps, once it is complete, it's going to turn around and take off. Now that I've done all the legwork and done every single bit of analysis for you, it just makes complete sense why it would go to where it would go. I mean, everything just says it's going to go right into this area. Everything. Breaker, anything from the breaker to the fair value gap to the Fibonacci, it all lines up in this area, right? So, you know, if it goes through it tomorrow and it goes all the way down to the bottom, you can blame me 100%. I don't care. But I am personally putting money on this tomorrow, and I'm going to be watching it closely and to see Depending on what time. That's going to be the next thing. It's going to be depending on what time. It's going to... if it... hopefully this happens around 10 a.m. to noon New York time, New York Eastern time. And the reason I hope it happens around that time is because that is when you get in sync with a larger time frame, right? So if it happens around that time, we are going to get in sync with the larger time frame, which means the larger time frame is going to be going up. If this happens at, you know, New York Open in between, you know, 6 a.m. and 10 a.m., we're probably going to see probably a huge, you know, bust up, but then we're probably going to see another retrace after that, and who knows what's going to happen. But we may see a small retrace and then continuation, who knows. But I would rather it to see this happen tomorrow, right around here. I'm actually just going to draw another box. Hold on, make sure I'm on the right time here, New York. I'm actually going to draw another box. Wish this would move out of the way. Between 10 and 12. Hey. Styles. Let's just golden it up. Let's just make it gold. I don't want to make it that gold, but let's make it gold. All right. So that's where I want it to be. It's exactly where I want it to be tomorrow. And in fact, I am going to place what is the top line? Well, actually, what is here? I'm just gonna put it the 618 563. Oh, why did you do that? Don't worry, it'll still be there when I come back. Okay. All right, so we're gonna place limit order, buy order, ask price, 6, oops, 5, PT2 4.44, quantity 5, sure, why not? Stop loss. I don't want to see it get any lower than this line, right? Well, it might get lower than this line. I don't want to see it get any lower than the 80. So let's go with 55,290, right? 55,290. And then take profit. Of course, your take profit. You want to go to your high. But let's see. We have high here. Is that the ultimate high right now? Is this the ultimate high? Let me see if it is. It does not line up. It's close to the 150, but it does not line up with the 150. So I'm just gonna put it as 61785. All right, there we go. Went ahead and placed a buy limit. And it comes down. Hopefully it's in this time right around noon. I want it to be around noon, and then we'll see it take off from there. Hopefully we'll see it take off from there. The only thing that bothers me right now, to be honest, is seeing this. And I want to make kind of an aura. Let's do like a blood red. How about that? With a little bit thicker. And the reason I say this is because there are two equal lows, right? So Whenever, same thing like equal highs. Whenever you see equal lows, it gets close to it. People go, oh, you see, this is support. People are gonna buy. People are gonna buy, and then people usually do buy, and then it starts going up, and then it goes boom. It goes right below it, and then as soon as it goes below it, back the other way. And seen it happen so many times, especially today on GBP USD. I can even bring that one up. Go here, GSD. I don't even care if you're fans of Forex or not. Hey, as long as it makes you money, it makes you money, right? Because GBP today was just absolute sideways most of the day, and I made a little bit of, like I should. I think I showed you earlier what I did with my stimulus check today, right? Maybe I can bring it up again. Here it is, payday. There's my payday right there. This is what I did with my stimulus check. I made a couple bucks off of gold and GBP USD. So yeah, that's fun. Anyways, just throwing that out there. Just show them, just like you and me. No, that's a demo account. That was just me. Of course, I was actually trying to, to see if I can grab some pips, but between doing this and that, and between meetings and whatnot, I'm just trying to do whatever. But as now I'm analyzing this, let's see here. What was I doing when I was analyzing this? Here we go. Here we go. See, here we go. You have equal highs. Look at this. Equal highs all the way across. That is a dead giveaway. It's going to shoot above it. Not only is it going to shoot above it, it's probably going to shoot below it again too. But the dead giveaway, I mean, if you want to scalp and you see this, right? Wait for a good sign, and then just as soon as you find a good sign that you want to buy, boom, you buy, and just wait till it gets above it, and then you just wait as long as you can to see how high it's going to get above it. If you're good at exiting and you know where to exit, just boom, exit like as soon as you can, because that's pretty much what I did, with my scalps today. This one was pretty much, looks like it was scalped out at the bearish order block here. Yep. So that last red down candle, the bottom of it looks like it came up to the bottom of that last red down candle, boom, hit it, and then turned around and went the other way. So that's what caused it. Again, price knows levels. Price does not follow trend lines. Price does not follow channels. Price follows an algorithm. Price tries to balance. Price looks for liquidity, right? Anybody that does these weird trend lines and bouncing off of, supply demand things, they just haven't. I'm not trying to put them down, don't get me wrong. They haven't really taken the time to look in, but put yourself as the trader of Chase Bank or Dutch Bank or the Federal Reserve or any other kind of large institution, right? Are you going to sit there and look at a trend line and go, oh, this trend line looks good, I think I'm going to just trade off of it? No. That's not what they do. that's not the people that are getting paid millions and billions of dollars a year are not getting paid to trade off trend lines. They're getting paid to understand algorithms. They're getting paid to look at these little nuances in prices and finding small gaps and understanding why there's gaps there. And again, there's just a lot going on in these charts that people don't realize, that, and especially in a 5-minute chart, that you can turn around and do, and you can scalp all day and night if you wanted to, and you'd be fine. You know, you make money for the rest of your life just by scalping 5-minute charts, as long as you know what you're doing. But you have to learn what is going on in the charts first and how they work. So now that I'm in the British pound here, I think I had a mitigation block, went above the, yep, here we go, we have a mitigation block here. So instead of, you know how you have a low, a high, a lower low, instead the opposite way, you have a mitigation block. So a mitigation block is you have a high, a low, and then a lower high, right? And then so now you have a low, you draw that out in the future, boom, what do you get? A mitigation block. So it's almost the same as, you know, a breaker, but it's the exact opposite. You flip it around, it's a mitigation block instead, right? So now you have a high, a low, a lower high, and then of course, you know, trade through it or whatnot. You know, it's not always going to work out perfectly, but then again, once it does get back down to that position, and especially at the time, let me see what the time window was for these. Okay, so this was the London kill zone, so you're going to expect this to probably try to push down as much as possible, right? And then as soon as London kill zone is over, boom, you have New York. You know, now you have New York open, so now it's going to go the opposite way. And then right here is when you have FOMC. FOMC happening at the exact same spot as your mitigation block that happened from the previous day, right? So now that happened, boom, it just takes off. So don't expect kill zones, anything like, you know, London kill zone or anything like that to try to help you with, you know, mitigation blocks and things like that. It's going to be more or less like things like toward the end of the day, or I mean, sometimes it can be kill zones. Again, it just takes a lot of reading, a lot of patience, a lot of understanding, and a lot of just trying to figure out what is happening and what's going on next. So let me see here. Now that that's being said, what's going to happen with British pound and the dollar? All right, so I already have this line drawn out here, right here. Let me turn this into a yellow one so you can see. Right, I am fully expecting the price, especially now that we're on the 1 hour, to pull back into here. Again, same kind of situation as gold, right? And I guarantee you it's probably going to end up being almost very similar to gold as far as what we're looking for, and as far as what we're chasing. Not really chasing, but to see what could possibly happen. Okay, so pull that there. Let's do this here. Here. Cross 39058. X, no, X, let's do dashed. Okay. Move that. There we go. Now let's do Fibonacci. And highest point, here we go. And then, of course, now let's just draw a box. Now that we're ahead of it, Fibonacci somewhere right around through here. Right around through about there. If I was to want to guess about a perfect time, yeah, 2 o'clock in the morning. All right, let's just go 2 o'clock in the morning all the way until noon. Right? That's where I would guess GBP USD would want to be hunting for, or want to be going for, before it starts turning around and going back up this way. Now, where is it going to aim for once it hits that? That is a good question. Right, what do we have? We have a high right here. I have no idea where this came from. Let's just get rid of that. No idea what this is. Let's get rid of that too. Right. Now I have this. Looks like I have this and this on the same kind of fib level. Now, see what happened with the previous one? All right, with this one going over to here. You also had this fib level coming down here. It hit right at the 618. At the same exact time, it was hitting the mitigation block. So, perfect. Mitigation block, right at the same time it hit the, it hit the 618, right at the same time as FOMC. Boom, takes off, right? Now that we're done with that Fibonacci, right? Now we're looking at this Fibonacci. So, what are we looking for? Okay, so looks like we have, I'm gonna say this guy right here, 127%. Just because it's above this previous high, it's going to be close to this previous high, so it might fall short. Also, it's close to a lot of these highs, so I'm going to say this is probably where we're going to aim for as far as take profit one. Well, take profit one should always be your first 100%. And what I mean by your first 100% is, it'd be this one right here, your first high, right? So that should always be your first take profit one. Now, if it doesn't get there, take profit wherever you can, because sometimes you're not always going to make it to the take profit one. Something may happen, something may go dramatically wrong. It could come here and hit this, and then come up here and then hit something else, and then it starts slipping away, and you never know what's going to happen. Take some profit, and then put your stop loss above where you entered, if you felt like you had a good entry. And if you got out on your entry, oh well, at least you didn't lose any money. And then see if it goes any further after that. And if you feel like it gets, if it didn't mess up any of your analyzations, Jesus, why did, if you feel like let's just say it fell way below down here, right? Let's just say the price fell way below down here. That is going to definitely screw with a lot of what you've analyzed, right? And so at that point, you may have to rethink almost everything you've analyzed, and you may not want to get in at that point. But you may have made a little bit along the way. If it did get in here, it went up, and you took some kind of some profit along the way, before it turned around and started going backwards, and you put your stop loss above your take profit. So you got to learn how to juggle these things. right? You know, it's not just a all or nothing. You know, a lot of people want to put, you know, one specific entry, you know, one set, you know, one stop loss, and then one take profit, and then just let it go. No, you have to manage the trade. Managing the trade is more important. It's the most important thing of all. So if you're not learning how to manage your trade, you're always going to come out a loser, pretty much, because I mean, you could, you know, you could get it, you know, almost did it again. Why does it keep doing that? You know, let's say if you did have that, right here, I'm just gonna throw a long position here, and let's say, you know, you did put it right here, right, and right here was your stop loss, which is usually your stop loss, right, at the 100% or at the 0.1, and oh look, went right to the 0.62. Even though I think I wanted to go a little bit higher, but actually no, yeah, let's just leave it there. The 0.62, that looks good. Right, let's just say, you know, that's it. Let's just say that's your trade, right? And you know, let's say it comes down, right? And then, you know, boom, gets in your trade, comes up. You're looking good, and then it starts falling, and then it turns around, it starts coming back up, and you're still holding out, and you haven't taken anything, and then all of a sudden repricing happens. Boom. I've seen it happen. Happened today. You know, it happened today with the FOMC. So if repricing happens, which central banks can do out of nowhere, central banks can reprice. They give no craps, right? So, but that's more of the Forex thing, right? So central banks can reprice. They give no Fs. They're there to protect their commodity. So it could do that, and you could lose everything if you're not taking a good profit along the way. I always tell people, find highs, right? Aim for those highs, take profit at those highs, right? And even if you're close to it, hey, take a profit. Doesn't matter. Take 20%, 20%, 20%, 20%. Or, you know, sometimes what I'll do is I'll take the first 30 pips. I'll take 50% of all the profit at the first 30 pips. And then 10%, you know, after that, all the way up. It just depends. It just depends on how the trade's going. So who knows? All right. Let's check out Ethereum. How much time do I got? I got 30 minutes. All right. Man, Ethereum has been off the wall. I don't really know what to think of Ethereum lately. You know, at least it got above 2,000. At least it got above 2,000, right? I keep trying to find something. I keep trying to find some kind of hope in here. And it's coming for sure, right? Right? See, we have buy side liquidity pool here. Buy side liquidity pool, buy side liquidity pool. We have some, oh, not for sure what this is anymore. Oh yeah, I think that's when it was a fair value gap, but that fair value gap has completely been enclosed. And now what happened is that price came down and hit a bullish order block. All right, bullish order block went a little bit sideways. Let's see what's happening now. All right, I'm on the 1 hour. Let me back up a little bit. Go to the day. Turn everything off. Take a look at it. Okay, we do have kind of a breaker here, right? The thing is, I mean, you got a low. It would start here though. You'd have a low. I'm not for sure how this one gets traded. We're gonna have to go down to the 4 hours on this one. All right. See what kind of breaker we have. If we have one. Low, high, lower, low. We definitely have one. Okay. Here's your low. Got your high. Lower, low. All right. So your breaker is in here. And you want it to be your last up candle here, right? I want that to happen. Did not want that to happen. Let me go sideways with it. There we go. That's 1976. That's about, okay. Not too bad. Okay, so it comes up into it. Pushes out. Okay. Right. Closes in these gaps. Thinking it would probably fall back in down to here around 1796, 1792. And then you would see a little bit of a run after that. Work now, did it? Ah. Right, there we go. Right. That's what I would be looking for. Pull back down into this area here. Maybe even a little bit lower. That's the reason I keep all these. It's this color coordinated. Make sure I know what I'm looking at here. It'd be here. Now, it hasn't broken that line either. Oh, before I go any further, this is a chart, and it's not a Venn diagram. Okay, the chart, but it's not a Venn diagram. Okay, just wasn't sure if you're aware of that or not. Want to let you know. Anyway, all right. Equal highs here, buy side liquidity pool, 4 hours. Okay, I see 3 equal highs right here. Expect those to get broken. All right, let me look lower. I want to look lower to make sure I'm not getting myself suckered into anything, okay? Okay, see how all three of these were about equal lows? And guess what? Boom, punch through. This one punched through. Punched through, but then came out of it. All right. I don't think we're getting to get any lower. I don't see any equal lows. I think a lot of this price action here negated a lot of stuff. All right. All right. Going in 1 hour. Yeah, look at that. You can see all that touching. Same spot. No going into it. Not a bad thing. Not a bad thing. That means when it does go into it, it's gonna be like a propeller. It's gonna propel it forward. And it hasn't closed this 4-hour gap. So here's a 4-hour gap that hasn't been closed yet. And it's gonna want to close it. All gaps want to be closed. But it's getting close to closing it. Once it goes back down here, propeller up. Close this gap. Make it to the top. Close to the top. Make it to somewhere around in here. No, no way. That's not a full block. No, never mind. Usually whenever you see order blocks, they're going to be huge volumes. Like this. Okay, that's probably what happened here. This. So these huge volume candles, it goes down, boom, comes back up. Whenever price comes from back up underneath it, it hits that volume and then bounces right off. So that I wouldn't be surprised. That's why I'm not surprised that that's what happened. Probably hit that bullish order block and boom. It could come back up, but I'm not thinking it will. If anything, it could come back up, but not too much farther. Probably gonna see the slide back off. Slowly move its way back up, who knows. And then that's where we're gonna see it. Hit this. Low, high, lower, low. Now we got the breaker. Now that we got the breaker, it's going to take probably some kind of good force to get it above. And then once it gets above the breaker, comes back down to the bottom, and then another push up. So I think we're probably looking probably close. We're definitely looking over, probably looking over $2,000 before the end of the month for sure. Tomorrow, not for sure what's going to happen. Before the end of the week, not for sure what's going to happen. I do think probably before the end of the week, we probably will end up above these buy-side liquidity pools. Tomorrow, I think we're going to be bouncing off of these guys, right? And then starting to head up this way. And then we'll see what happens after that. That's what I got for Ethereum anyway. Anyways, it is late for me. It is 11:15. I need to be in bed because I have to be up at 4 for work, so I have to be up in 5 hours. Other things I would tell you to caution and to look at would be the SPX. I love the SPX just because it can give you a lot of good money and very, very quickly. If you have a lot of money in your account, the NAS can do the same. But the NAS is nasty. So, if we're looking at this from here, let me just try to get through these really quick. How about that? All right, so I made some good money off of SPX 2 days ago. I want to say I entered right into this area and I just let it go, and I don't think I stopped it until it was probably like late last night or something like that. But it was a lot of money. But I was pretty at first I lost money because I was like, buy now, because they're gonna try to make you fake, they're gonna try to make you think it's gonna keep selling, and then it's gonna turn around and buy. Well, it did keep selling, so I did lose a little bit of money in the beginning, but then once I realized what was going on, I looked over and tried to like read everything that was going on. I bought at the right time, and then I ended up making money after that. So but look at this. I mean, see here, I'm looking at the 1 hour here. Breakers. I mean, just look at them. Low, high, lower, low, breaker all the way across. Boom, pumped up. That's that. Actually, that was the one that got me, was because that's where I thought it was gonna go. Because I thought it was gonna get to that bottom of that breaker, and I thought I was gonna buy, and I started buying at the bottom of that breaker, and it didn't. Instead, it turned around and went against me. So, that's when I had to do a little bit more studying and realize that there was I think if I look down in here, I think it was this order block is what did it for me. This huge push down, all this volume that just massively went down and then slowly came back up. There was a lot of institutional selling in that, and so since there was a lot of institutional selling in that, price was trying to get back down to those levels. That way it could regain all the money that it had lost from selling it at that point. So that's one thing I didn't take into consideration whenever I was not looking at that. So something else that you should take into consideration too. Look into huge, especially if you see huge red candles like this, wait to see if there's going to be another red, or at least, if it looks like there's a, a mitigation block, or, a breaker or something like that. See if there's going to be some kind of large institutional candle that's going to have a lot of volume in it, right? That's going to be a lot of just selling, basically, because what they will do is, okay, so if you never watched my channel before, this is the easiest way to explain how smart money works, right? So let's do the short position first. The people who have a ton of money, right, they do this. Right? They do this. What they will do is they will drop it as much as they can, right? Because they have a ton of money. And why do they do it? Just to get a little bit of a better position. So then they'll go long at the perfect time, right? They go long at the perfect time. Actually, we could probably move this over here. Actually, let's get rid of this damn thing. Right? So here they go short. They drop all the money they can, right? And they also leverage it too. They leverage it so that whenever they leverage it, it makes it go down even faster. So by the time they leverage it all the way down, within an hour or so, they turn around, they buy it, and then they leverage the crap out of that one too. So by the time they get done leveraging that one, the price actually already may be higher than what they've already than what they've sold it for. So they cannot release it in time, or they cannot sell it in time, you know, to make a profit. So what do? They hold on to it. Why? Because they have very, very, very deep pockets, and they can be in the red for a very, very, very long time. And so what'll happen is then finally it'll finally come back down into that red area, right, to where they sold off to in the very first place, right? And then what do they do with that area? They'll just get rid of it. They'll just get rid of that sell, and then they'll keep the buy, right? So that's the way how smart money has always been taught to me, right? They drop it, right, with a lot of money. They leverage it so it drops really quick, right? And then they hold on to it, even though it can go negative for so long. They'll still hold on to it because they have very deep pockets. They can go negative millions and millions of dollars. It doesn't matter. And so by the time it finally gets back down to zero, then they can just let go of the trade, and they even out at zero at that trade, but they got into a better position at this trade and got out here, right? And then made a ton of money on this trade going up. As you can see, I guess I was trading this one. Yeah, definitely trading this one. As you can see, I bought here, got out here, got out here, got out here, bought here, got out here. So the SPX is definitely one of my favorites because I can read this one pretty well. And I'm pretty good about it. So bought here, sold here, bought here, sold here. So hopefully the same thing happens with tomorrow with the SPX. I don't know what's going to happen tomorrow with the SPX. Considering I think we are at all-time highs, if I'm not mistaken. Again, almost at 4,000. This is insane. I remember earlier this year when we were barely breaking 2,000. It's just like, it's crazy. Was it earlier this year we were barely breaking 2,000? I can't remember. Or was it 3,000? It was 3,000. Yeah. Dude, it may have been 2,000. We got close to 2,000 at the beginning of the year. That's what it was. Now we've almost doubled it in a year. Is that sustainable? I don't know. That's a good question. But I think crypto has a lot to do with it. I think the crypto market and the actual stock market going hand in hand are working well together. Without the crypto market, the stock market wouldn't exist right now. Without the stock market, the crypto market wouldn't exist right now. So I think both of them going hand in hand is what's keeping them both alive. So we'll see. We'll have to see. Short term, let me see here. again, probably, I mean, this is all looking very, very too familiar, especially when it came down to, you know, when I did the thing for gold and I did the thing for GBP USD. This is all looking way too familiar. And that's all looking probably coming down to the same area. Okay. Right. Two, here, here, here. Here, 35, 39.58, 4. 39.50. I like to measure the middles just because the middles just seem like that's where the price likes to. If it doesn't get there, then it likes to get close. So if it dips down, you know, gets close to the middle, boom, it'll probably take off. Even if it just dips down, boom, it'll probably take off. Times it may get a little bit lower, but generally I always just like have the middle, just more of like a visualization just to see where we're at in the in the gap that we're in, I guess you could say. So that being said, now let's do Fibonacci. Right, lowest to the low here, go to the high. Look at that, right in the middle, 618, right at the bottom of the gap, 780. It's just stupid how much all this lines up. Whenever you do it in a mathematical, formulaic way, and not just go by trend lines and channels. Do the trend lines show you this? No. Does the trend line show you that halfway through or of a gap of a Fibonacci, you know, of 80% or anything like that? Would it show you that it would probably bring you to this area? No. If anything, what a trend line is probably going to do, and I'll probably back out of this. One second. I'm not going to back out of it all the way. But look at this. I don't even know if this is even a trend line. Somebody's going to sit here and go, look at this. This makes sense. But when price get close to here, it gonna go boom. When sadly, in all actuality, it's probably gonna be more like, well, here's 11 o'clock, here's noon. More than likely what's going to happen is it's probably going to be like afterwards, and it's going to go way past it, and then it's going to take off. So people are going to start buying like right around here in a frenzy, thinking that this is some kind of trend line, and then it's going to go way past it, taking everybody's money, and then take off. That's why I just don't believe in trend lines or channels, just because they're just